Have you ever wondered why some business owners seem to legally pay far less in taxes than everyone else? It's not because they have a better accountant. It's because they have a tax plan. Most people think tax preparation and tax planning are the same thing, and they are not. Tax preparation is looking backward, where tax planning is looking forward. And that one difference can save you thousands or even tens of thousands of dollars every year. My name is Sherry Borshoff, and I'm an enrolled agent and a tax strategist and the founder of Bastion Business and Tax Services, where I help small to medium business owners build a fortress around their business with proactive strategies like this. Today I'm going to explain what tax planning is, why every business owner should be doing it, and exactly how tax planning works to help you build a stronger financial fortress around your business. Let's start with what tax planning is. Tax planning is the process of proactively managing your income, expenses, investments, and business activities throughout the year to legally minimize your tax liability. Notice that I said proactively. Most taxpayers only think about taxes once a year when it's time to file their return. And frankly, by then, most of the decisions that affect your taxes have already happened. Think of it this way. Tax preparation is like reading the scoreboard after the game is over. Tax planning is like having a coach helping you win the game while it's being played. When I prepare a tax return, I'm reporting history. When I do tax planning, I'm helping clients make decisions before the tax year ends. Some examples include timing income and timing deductions, choosing the right business entity, setting up retirement plans, managing capital gains, structuring compensation, making estimated tax payments correctly. The goal is simple. Pay the amount of tax that is legally required, but not 1 cent more. Taxes usually are the largest expense for any business. You monitor your payroll, your rent. Often that taxes don't come up until it's tax filing time. The largest expenses they will ever pay, a small reduction in taxes has a large incentive. For example, if you save $10,000 in taxes, then you don't have to earn an additional $10,000 in sales. And the savings go right into your pocket. And surprises are expensive. One of the most common things I hear is, I wasn't expecting to owe that much. The problem isn't usually the tax bill. The problem is the lack of planning. Quarterly reviews help identify income increases, profitability changes, investment activity, capital gains, additional tax exposure before it becomes a surprise. The tax code rewards planning in that it has incentives to encourage certain behaviors. Some of those examples include starting a business, hiring employees, saving for retirement, investing in equipment, owning real estate, making energy efficient improvements. People who understand these incentives often benefit the most. People who don't know about them will miss the opportunities. Tax planning creates better business decisions. Good tax planning isn't just about taxes. It's about helping business owners understand their cash flow, their profitability, their growth strategies, compensation planning, and their investment decisions. The result is a healthier business overall. So here's how tax planning works. At Bastion Business and Tax Services, we generally follow a 4-step process. Step 1, we understand your current situation. We'll begin by analyzing prior tax returns, your current income, business performance, investments, family situation, and what are your future goals. You cannot build a roadmap if you don't know where you're starting from. Step 2 is we estimate what the rest of your year will look like. Our questions include, will your revenue increase increase or decrease? Are you selling any property? Are you exercising any stock options? Will you be receiving any bonuses? Are you planning on retirement? We build the projections around these answers. Step 3, we identify opportunities. Once we know where you're headed, we can identify planning opportunities. And examples include retirement contributions, contributing to a SEP IRA or a solo 401k or even a simple IRA. This can reduce your taxable income and help you build wealth in the meantime. We also look at what your entity is and if you should become an S corporation. And if you're curious about that, check out the video, Should Your LLC Become an S Corporation? We look at equipment purchases, and sometimes accelerating equipment purchases before year end can create additional deductions because timing matters. We do capital gain planning. Investors and real estate owners often have opportunities to strategically manage gains and losses. The key is to know before the transaction occurs, not after. Number 4, we monitor throughout the year. This is where many people miss the mark. Tax planning is not a one-time event. It is an ongoing process. Business conditions change. Laws change. Income changes. Life changes. Regular reviews allow us to adjust strategy and circumstances. Here are some common myths about tax planning. My accountant will automatically do tax planning. Not necessarily. Many tax professionals primarily focus on tax preparation, and planning is usually a separate service that occurs throughout the year. Myth number 2, I don't make enough money to need tax planning. Tax planning often provides the greatest benefit to growing businesses because it helps avoid costly mistakes early. Myth number 3, tax planning is only for the wealthy people. Oh, honey, that's not true. Anyone with business income, rental properties, investments, multiple income sources can benefit from tax planning. Myth number 4, tax planning means avoiding taxes. Nope, tax planning means legally managing taxes. There's a big difference between tax avoidance, which is legal, and tax evasion, which is illegal. We always operate within the law. In closing, if you remember nothing else from this video today, remember this. Tax preparation reports the past. Tax planning helps shape the future. The earlier you begin planning, the more options you typically have available to you. Waiting until March or April to discuss tax limits can be detrimental because after December 31st, your year is written in stone. If you're a business owner and you've never had a formal tax planning meeting, now's the time. Your business deserves more than just tax preparation. It deserves a strategy. At Bastion Business and Tax Services, our mission is to help business owners build a strong financial fortress around their business through proactive tax planning, bookkeeping, and advisory services. If you find this video helpful, be sure to like and subscribe and share it with other business owners. And remember, don't just prepare for taxes, plan for them. I'm Sherry Borshoff, enrolled agent, and I'll see you in the next video.